this is a year which I think was very unexpected. 1 year ago, Trump was coming, there were all kinds of disruptions that were anticipated. Many people said there's going to be a recession globally, everything is going to go to hell. What has happened? At this particular year, it has been a year of unexpectedly fast growth in India, 7.5%, very low inflation, below 2%. The RBI governor has called this a Goldilocks year. It is a remarkable year, given all the headwinds that we have seen. Having seen this then, how do we look forward to the coming year? It seems to me that Nirmala Sitharaman, once again, faced with headwinds globally, faced with all kinds of uncertainties, is likely to say, look, batten down the hatches, the global storms are still going on, there is no need to risk any radical changes. This should be a year largely of continuity. We are doing various things right. That is why it's a Goldilocks time right now. Let us continue with it. Therefore, I would expect relatively few changes, continuation of the trends, fiscal consolidation, attempts here and there to offer an incentive or two. But overall, one of the emphases would be the deregulation and the committee they sent up in this particular thing. I would expect more of the same rather than any major changes. Pranjal, tell me, how do you see it?
Yeah, thank you. I look at it in two parts. One, what is the state of the economy? And second, therefore, what do we expect from the budget? Now, the state of the economy, I think 2025, as you said, was strong growth year. But it was strong, and let's be very careful about this. It was strong because a lot of things went right for us. It was a year of great rains after a few years of very uncertain drought-like situation. It was a year when oil prices really fell, and that gave us a terms of trade boost, generally good for growth. It was a year in which the fiscal gave us all kinds of tax cuts, GST, personal income tax. And it was also a year in which the central bank, because of low inflation, came and cut rates and did a lot of regulatory easing as well. So a lot of cyclical factors came together and made this a year of remarkable growth despite uncertain external environment. But as we go into 2026, Mr. Iyer, my sense is that many of these one-time boosts may not last in full vigor. Oil prices, I don't think they're going to fall further. Even if rains are good for another year, I don't think growth can really rise on the back of that because the base effect has already been adjusted last year. So we need to do something new, something more. We need to think about new sectors that can participate to make 2026 a stellar year as well. And the one thing that comes to my mind is perhaps, we can make a policy environment that is more conducive to investment and that is more conducive to formal sector growth, which had suffered a little bit last year. Perhaps these are the two areas that we need to look into. So then the big question is, to keep growth strong in 2026, when some of the drivers of 2025 might fade, what should policymakers do in the budget and even the upcoming RBI meeting? And my sense is that I think at least the budget should focus on restraint. So exactly like you think as well, I think it should focus on restraint and it should focus on reforms. Focusing on restraint just basically means bringing down the fiscal deficit gradually. I'm happy to say that I think the job this year will not be as tough as the last few years because the ask rate for bringing down the deficit is a bit smaller this time, about 0.2% of GDP, from 4.4 to 4.2% of GDP. In previous years, it has been much more. And this year, we also have a lot of help from non-tax revenues. I think RBI dividend is going to be strong once again. So I think it's possible to do, but we should focus on sticking to the fiscal consolidation path. A couple of things that could help along the way. I think last year, the government thought a lot about consumer stimulus, basically all the tax cuts. I think it's time to pivot back to investment. And I'm hoping that the CapEx outlays are strong this year. And within CapEx outlays, we see a lot more on urban infrastructure and loans given to states to do CapEx. I think these are two areas in which a lot of CapEx can still happen. So generally speaking, restraint in this time's budget,
You were mentioning right now, there was the question of investment. This has been seen as a weak spot, especially private sector investment. Public sector capex has helped. But I have another way of looking at it. I said that, look, if you have fiscal consolidation, if you have fiscal consolidation and yet you are able to grow at 8%, well, 8% for the first, it will come down maybe at the annual rate of 7.5%, which would still be remarkable. But it seems to me that if you are already achieving this, to say that there is not enough investment, I would put a question mark. A lot of people look at the trends and say that especially private sector investment is less than it used to be, and therefore perhaps it has to be raised. I would say that in these current global conditions, people will focus on producing for the domestic market and they will not focus on producing from the global market, which is very, very uncertain. And right now, the current rate of investment that is going on, if it is enough to achieve 7% plus, to say it is insufficient or that it has to be stimulated, I would raise a question. I would say it seems to me that we are doing well enough not to have various experiments, and I suspect that is the way Nirmala Sitharaman will go. Of course, being a politician, she has to offer something for every sector. No sector will be left behind. But overall, it seems to me that, as long as you are having a budget where there is fiscal consolidation, that fundamentally is not a stimulus budget. It has worked out that well, and I am glad it has worked out well, and I hope it will continue. But I would not call these, if you have a little cut here and a little cut there, I would not call that budgets that are stimulating budgets. As long as we are having the consolidation, I would say we are very quietly managing to get good growth even while consolidating, which is so unusual, which is remarkable, that I would say that we would have continuity even while the finance minister will attempt to give a little to a large number of sectors. It is the fundamental strengthening of the economy, it seems to me, that is working. It is not an incentive here or a tax there. It seems to me there is a gradual strengthening of the economy, of which I would say the deregulation committee that has been set up has apparently been doing a lot of good work. So I'd like your views on this, whether investment really is good enough, and secondly on the deregulation.
Yeah. Look, I understand that when we are bringing down the fiscal deficit and we are sticking to a consolidation path, it's hard to give a boost. But I think some readjustment can happen here. I think we can cut back a little bit on current expenditure and put some of that savings into capex. If you look at current expenditure, my sense is that the number of centrally sponsored schemes has only doubled in the last couple of years. I think it's getting messy again. I think, these schemes, they get messy again after a cycle of elections. And then there's a huge sort of consolidation, weeding out, cleaning up, mergers of schemes. And eventually you get some saving. I'm hoping that this year we do that cleanup of current expenditure, where huge proliferation of schemes has happened, and use some of that money to boost the capex budget. I do think that, after a year in which we focus so much on consumption, I think we need to also focus on capex in the same way, given a lot is happening, especially on state capex at this point of time. So, there is something I wanted to talk about, which is that I'm seeing that after a very long time, India's laggard states, low GDP per capita states, have started doing a lot more investment. And we've actually seen a few years in which these low GDP per capita states are growing faster than the high GDP per capita states. And when I ask why, it all comes down to public investment. And I don't want that to be hurt. I think that catch-up is a huge source of GDP growth in our country. So therefore, a capex focus will be nice. On your other question, that don't we already have enough investment? Look, my answer is we don't. I think private capex is not good enough yet. If you look at GDP and you feel like GDP is very strong, I really want to, this is a different topic, but I just want to put it out there that I do think that there are a lot of issues with the GDP numbers, particularly right now when commodity prices have fallen a lot. We've seen it in the past. When commodity prices fall a lot, we tend to exaggerate GDP growth. My sense is India's GDP growth, while the number we'll get for this fiscal year, FY26, will be closer to around 7.7%. My sense, after cleaning up some of the deflator issues that I think are there in the statistics, the actual growth on the ground is closer to 6.7%, a percentage point lower. Fine, even 6.7 is a strong number, I agree. But remember, we got a lot of one-time boosts, like rains were good after a very long time, oil prices fell, and these will not continue to have that same boost in the next year. I do think eventually we need more private investment, better wages, and therefore through that channel, better consumption and strong growth.
On the private investment side, certainly a large push in foreign direct investment would be useful if there is some weakness on the part of Indian business. Indian business was, and this is not given the global thing, you really have to worry, if you're trying to produce or invest for the export market. Not very much. But what would, of course, be very good if a large amount of FDI came in from outside. That would be private sector investment. And the foreign companies can do it because they can export to their own international arms. They don't face an additional problem of Trump uncertainty. They are in a much better position to do so. In this, let me draw your attention to Anant Nageswaran a couple of years ago in the economic survey. He had emphasized the point that, look, we have to attract Chinese companies to invest in India. One way he put it was that, when China has this huge current account surplus with India, it would be one way of settling it down if part of that China's surplus is then invested in India. And again, if you have all these iPhones being produced in India with a very small amount of value added, if you have more and more companies in that chain, some of them would have to be Chinese. So Anant Nageswaran was very much in favor of attracting Chinese investment. But this apparently at this point is going nowhere because of geopolitical concerns, because of security concerns. Now, I have always thought that if there are 5,000 Chinese companies in India, then I have 5,000 pressure points which I can very gently in a calibrated manner address if I want to react to something from China that I don't like. But if I don't allow Chinese companies here at all, I am depriving myself of levers which would be useful in security. So it seems to me that far from Chinese investment in India being a security risk, I think by giving us additional levers, it would actually be good for our security. I'd like your views on this.
Yeah, that's a fascinating point that you have raised. And I completely agree with you. I think we can benefit a lot from getting FDI from China. 2 years ago, China became a net FDI giver to the world. The big beneficiary was ASEAN, especially Vietnam, and India did not get a penny because, in a way, India had shut its door to Chinese FDI. Where I think India and China can partner in terms of manufacturing and FDI is mid-tech goods, things like textiles, footwear, furniture. These are areas where my sense is that the security issue is much lesser. They are not chips, they are not defense goods. And it is to India's advantage because India has a huge amount of labor force. The general average wages are lower in India than in China. And these labor-intensive sectors can grow well. China's technology is extremely advanced. And if we can get FDI from China for these labor and mid-tech sectors, I think we are to benefit from that perspective. So, this is sort of one point I want to make, but I also want to connect it to the point I had made earlier that I'm noticing that India's laggard states are starting to catch up. And it's these laggard states, which are mostly in the northern belt, which have the real wage advantage. So imagine a world in which we are attracting labor mid-tech FDI from China into some of these states on the northern India, which have the real wage advantage, and they can be a source of growth and they can be a big source of even exports over time. So I'm completely on the same page with you that we are losers if we are not attracting, Chinese FDI into our country.
If you look at the actual patterns of foreign investment, it does not go into labor-intensive areas. It tends to go into very capital-intensive areas. We had, Microsoft, Amazon, these three foreign American multinationals have pledged to invest $67.5 billion. which is a very impressive amount, but it's all going to be basically in data centers to support the global capability centers of these multinationals. So from the multinational point of view, I do not think there is no evidence that they see India as a good place to invest in labor-intensive areas. On the other contrary, they say India is a place of cheap skills. Therefore, what they are investing is wherever the skills are available, they will invest. This can, of course, include something like auto, where skilled labor is being used to produce relatively high-quality, high-priced product. Not in textiles, not in shrimps, not in that particular area. And I would say that this is because India is not attractive overall for labor-intensive things, because we artificially are boosting wages in the formal sector. One of the things I've noted, and I've written about this, is, if you just look at holidays, I mean, there are companies which have 1 month of paid leave, annual leave, 15 days casual leave, 15 days sick leave travel allowance, and then, of course, 6 months of maternity leave. But if you add all this up, it really means that when you shift from informal to formal, there is a huge rise in real costs to the company. The non-wage component goes up. There is the contribution to this, that, and the other, to the pension fund, to the provident fund, gratuity. We just saw the latest labor reforms were hailed as being something that makes things easier for business. We discovered in the actual results of Infosys, Wipro, and other companies that the new labor codes in regard to gratuity have in fact once again increased the real wage costs in the formal sector compared with the informal sector. So we are a country where both the BJP and the Congress are people with strong trade unions, and they are not particularly interested, I think, in pushing the envelope on this particular thing. What is happening is that there are some states which have pushed the envelope. So Tamil Nadu, Bangalore, Pune, some of these areas are going ahead rather than something being done at the central level or through the central budget. Would you think so?
Yeah. So, I'll go back to your first question on FDI. I think India is a very large country with many layers and many levels of skills. And we can't just bank on high-tech FDI and high-tech manufacturing to get us growth and jobs for everybody. I think we can easily have both mid-tech and high-tech coexisting, and that would be the right way to go for us, because there will be jobs and there will be, opportunities for our skilled labor force as well. I won't agree with the fact that you said that there is no FDI in mid-tech. I think the entire story of Vietnam's fascinating rise in the last couple of years is all about FDI into mid-tech sectors. And on the back of that, they've become huge exporters to the US in all kinds of items like textiles, furniture, footwear. And why should we not do that? Why can't both these India exist? Given our population, we actually need both of these Indias to exist. So I do think we should still be trying for FDI in mid-tech manufacturing, even though, we continue to get it in high-tech manufacturing. I think we need both. And on your other point on, the labor reforms and things like that, I completely agree with you. I think there's a lot that still needs to be done. We are not making it easier for corporates to really, get labor, hire, fire, and we are not using our best endowment, which is India's labor force. So while, there were very big steps taken a few months ago, I think a lot more needs to be done. But, I also wanted to talk about a different kind of reform. In a way, we are talking about all these hard reforms, product market reforms, deregulation, labor laws, and all of that, which are great. We need it. But I think alongside, we also need some softer reforms, things like certainty, things like predictability. For example, look at our taxes. We need a lot of stability in our taxes so that investors, MNCs who actually put in investment into India, they are secure that over 10 years, there won't be a sudden change. Or 10 years down the line, you won't be asked to pay up for something you did 10 years ago, a different interpretation of a previous law. So I think we need a lot more policy certainty as well. And I think that's a reform that is not really spoken about in India.
Yeah, there's this court judgment which has upset a lot of foreign investors. And since it's a court judgment and not something the government is doing, uh, does it, I mean, does that not just show once again that in many countries there is a kind of, that if something has happened in the lower courts, there will be similar things throughout. Here in India, there are constant flip-flops at every court level. Do you not think this is a major problem from the point of view of foreign investors?
Absolutely. And this is exactly what I call soft reforms. That how secure do you feel about contracts or about policy certainty, tax policy continuity, judiciary participation? How confident do you feel about all of these things when when you come and try to do business in India? So completely on the same page as you.
Yes, indeed. Uh, I was surprised to find that Vietnam has come in as a substantial foreign investor in the e-vehicle side. We had normally used to be thinking of those countries not as being suppliers of capital and technology. Do you think that the whole of Southeast Asia, we should be expecting, or we can attract much more instead of just talking about the Western MNCs in China? Are there other things to be tapped in Southeast Asia? And have the various free trade agreements that we have struck, have they really helped with some of these other countries?
Yeah, I'm so happy you brought this up. It's a topic very close to my heart. I think we are looking west, and that's the right thing to do because the West is going to be the ultimate buyer, the ultimate consumer for a very long time, given the West has much higher GDP per capita. But the producer is the East. The producer is China and it's ASEAN. And while we are striking all these trade deals with the West, the one with Britain, the one with EU, which was announced just yesterday, my sense is that's half the job done. I think the other half is to really clean up our engagement and our trade agreements with especially ASEAN, which has suddenly become a large manufacturer. And I think it has huge potential to grow over the next decade. If we can work with ASEAN and actually get into the manufacturing value added chain with ASEAN sort of at the focal point, my sense is we can then become even bigger manufacturers to serve the West eventually. Because the truth is that the world has a lot of value added manufacturing at this point of time. We can't produce alone and sell it to the West. We need partnership. And I think if we can get into a better partnership with ASEAN compared to what we are doing right now, I think we will benefit. And from that perspective, I hope that 2026, 2027, we will also think about upgrading our engagement with ASEAN and the Asian bloc.
Very good. So let us look forward to the budget in a few days. Are you an optimist in regard to the budget and the coming year?
Look, I'm absolutely an optimist. When we look at markets today, we see that across asset classes, equities, debt, and FX, we have underperformed emerging markets over the last year. But if I look at the fundamentals, I see India having decent growth, low inflation, a fiscal deficit that, yes, is high, but is coming down, a current account deficit that is in the 1 to 1.5% range, which is sustainable in a normal day. I see our fundamentals being extremely strong. And you add to that the fact that we are trying to do some deregulation. Yes, sometimes you get it right, wrong, we are not fast enough. We are now doing a lot of external reforms. We are trying to strike trade deals. Hopefully, we will bring down the custom duties, be more friendlier to FDI inflows. But I think all of that is a very good package. So I am optimistic and fingers crossed for a good budget.
Okay, Prajwal, thanks very much. I am an optimist myself. Let's hope that things work out just as we think.
Lovely chatting with you. Thank you for having me.